how much conviction do you have in certain themes and certain sectors? And if you have high conviction, just know that there's a light at the end of the tunnel. This conflict will end, things will open up again, and I think that's going to come sooner rather than later.
Do you feel like this could be just a relief rally and the bottom, even though it's hard to guess, like you said, maybe the situation could drag on a little bit more?
The best thing to do in these times is to stomach the volatility, stay invested in the market, dollar cost average down when you can, and then wait for the return to the market.
Is that a risk at all that maybe this war will trigger some sort of Fed interest rate reverse or stagflation risk? Even if the war resolves, for yourself, do you see any possible Black Swan event or some sort of the biggest risk that maybe the market's not pricing in yet?
As we clear up this Iran situation, once that's cleared up, once the US withdraws, once the Strait of Hormuz opens up again, and I think that's imminent, I think all of the themes that I talked about and the overall market bounces back, and I think it's an excellent opportunity to get in.
Hello, Paul.
Hey, Chris, how are you?
Hey, I'm good. Yeah, welcome to our show. Thank you so much for making the time to come to our studio. You come this at a perfect time right now for the investor who seeks some information about the market. As we know that right now there's a war going on in Iran, and the situation is quite dire. The news changes every day. There's a lot of uncertainty. So right now, even though the market has been coming down daily, every day, but there's been, whenever positive news comes out, market do bounce. Like today, we're talking. Just to share with everyone, today is April 1st, and the news is that Trump just announced that the U.S. may withdraw the troop within 2 or 3 weeks, despite, not being able to open the Strait of Hormuz yet. So that's the current situation right now. We're in a high volatility market, Paul, and investor are not sure what to do. I hear that a lot of people are holding a lot of cash. Some people are still invested, but they're not sure if they should add more in. What's your thought on the market right now?
First, I would say in the United States, we have a thing called April Fool's Day. Let's just hope Trump is not making a joke here and that he actually does intend to end the conflict within the next 2 to 3 weeks, because that would be ideal. But, I think investors have to see through the noise. When you think about Donald Trump, and you think about his administration, the number one thing is he's a pro-growth president, all right? But he's also pro-America. And he's trying to reassert the U.S. in the Western Hemisphere and in the Middle East. And for a long time, we had a major adversary, which was Iran. And what we're finding out through this conflict is just how big of an adversary they were, not just to us, not just to Israel, but to their partners in the Middle East. I mean, I think one of the most shocking things is that after the US and Israel attacked them, they started to attack other Muslim countries and other Middle Eastern countries that you would think would have been their allies. But it just shows the character of that nation and how much trouble they were causing in the region. So when investors are taking a look at this situation, they should know one thing about Donald Trump. He doesn't want to be there for a long time, but he wants to get the job done. So he'll take the time to get the job done, and then we're going to get back to normal. We're going to pull out, and we're going to make a deal. Remember, Donald Trump is the big deal maker. And so he's going to look to make a deal with Iran or whoever is running Iran right now so that the Strait of Hormuz opens up. Energy needs get met again from our allies in Asia and in Europe. And you're just going to have to deal with the noise and the rhetoric and, how he sort of operates, because everything he's doing is trying to position the United States for a negotiation, whether that's him saying, all the nations that need the oil from the Strait of Hormuz must deal with it themselves. Like, if I interpret that the way I know what he means is he's trying to get NATO member countries to help him and get more involved because they haven't been involved with the mission in Iran, right? So that's his way of doing that. And then from an investment standpoint, I think the number one thing that you have to think about is how much conviction do you have in certain themes and certain sectors? And if you have high conviction, just know that there's a light at the end of the tunnel. This conflict will end. Things will open up again. And I think that's going to come sooner rather than later.
Okay.
And then you want to stay in the market if you have high conviction. Going to cash and trying to time when this thing's going to end, that's just a fool's errand. No one can ever time the bottom. No one can ever time the top. The best thing to do in these times is to stomach the volatility, stay invested in the market, dollar cost average down when you can, and then wait for the return to the market. And you could see, like you said, every time there's a bit of good news, what are people doing? They're getting back into the market.
Yes.
You don't want to try to time it too perfectly. So stomach the volatility, stay in the market, in those high conviction places that you think are, long-term growth opportunities. And I think there's going to be a light at the end of the tunnel.
Thank you. But let's talk about this rally a little bit. Assuming that it's not a President Trump April Fool's joke, which I hope not. Do you feel like this could be just a relief rally and the bottom, even though it's hard to guess, like you said, maybe the situation could drag on a little bit more because pulling out of Strait of Hormuz does not resolve the oil crisis situation yet. So maybe there could be more problem to the economy coming on later on or inflation problem.
So we're not going to get supply up and running right away. So yes, do I think it's kind of a relief rally? I think anybody's looking for good news. What you know about this market is a lot of it's driven by algorithms, right? So like every little bit of news will drive an algorithm. So good news, thinking that, energy needs are going to be met in the future or that there's some good news coming out of Washington that we're going to resolve this crisis will drive the market pretty quickly. Again, I don't like to think about all that noise. What I like to think about is like, what do I have high conviction in for the long term? And am I positioned well for when the market returns? Because again, I do think the market's going to return. I just don't know on what day. So I wouldn't look at one move here or there because, a bad piece of news or rumor could come out tomorrow, or Iran could come out and say something like they're not willing to negotiate. And then all of a sudden the market goes back down. What I would say to you is look for value in growth names. And if you look at the market today versus where it was 3 weeks ago, you're getting a lot of good growth names in good sectors at a value price. And if you have high conviction that the long-term investment trend is still intact, like in AI, like in humanoid robotics, like in aerospace and defense, or in the globally systemically important banks, the largest financial institutions in the world, like we believe and have high conviction in those themes. That's something that you should just stick with, dollar cost average down what you can, and get through this sort of moment of time, this noise in the market. Because there's a lot happening and there's a lot changing, and you just have to see through that to the investment opportunity.
Okay, AI, robotics, and a lot of those themes you mentioned, we'll definitely go into details about.
Yeah.
But let's just want to bring you back to the little bit of short-term market a little bit more. So you do feel like, even though it's hard to guess where the bottom is and it's hard to guess what the situation will be, there's a lot of moving factors. What you do believe that we're nearing to the lower end from the higher end, basically.
Yeah, I mean, I think like the initial shock of us teaming up with Israel and attacking Iran, I think that was very shocking to investors, to the market, to the world, especially from a president that said that he didn't want to intervene around the world, that he wanted to keep the U.S. Interests in mind and like not, send troops and get involved where we didn't need to get involved, right? So I think that was a shock to everybody. But again, it is a short-term issue, and Trump does not want to be in elongated wars around the globe. So he says that we're going to be out of it in the next 2 to 3 weeks. I take him at his word. And I believe that they're working on a deal with Iran right now. So for the short term, there might be a little bit of disruption. There might be market volatility, but I think you have to stomach that volatility. I think you can't try to get in and out of the market unless you're a day trader, unless you're like a professional trader that does that for a living. I think there's still great long-term investment ahead, and you just have to get through the noise. So from a short-term perspective, I don't really worry about it too much.
Okay.
The way that I try to look at short-term market movements is is AI still intact? Is there still large investment that's being there? Is there still development that needs to be made in data centers and in chips and in racks? Like all of that is still in play. It's not going away, and the investment's not stopping tomorrow. So I have high conviction that that's going to continue through any bit of the noise, and any downturn there, I'm interested in buying. Is humanoid robotics in the early stages? Yes. So in my opinion, all this noise did was decrease the valuations of some of those companies, get you into, allow you to invest in them at a better entry point. So from my perspective, that theme is still intact. It's long term. I'm happy to be in it. When you think about global defense, I mean, the U.S. is doubling its military budget over the next year. Okay, they were spending about $900 billion already, which was larger than any other nation. They're looking to increase that to about 1.5 trillion. Europe is now responsible for their own defense. So they are increasing their spend from 2% to 5% of the GDP for NATO member countries. Like that investment theme is still in place. So why would I want to try to get in and out of the market through what I would consider short-term volatility as we clear up this Iran situation? Once that's cleared up, once the U.S. withdraws, once the Strait of Hormuz opens up again, and I think that's imminent, the world's not going to let the Strait of Hormuz be closed for too long, for too much longer. So that's an imminent situation that we come to some kind of resolution. I think all of the themes that I talked about and the overall market bounces back, and I think it's an excellent opportunity to get in.
I'm excited to talk about AI with you and the defense theme, aero defense, like you mentioned. And I do believe it's still intact. And part of it, I think, the headlines on the war is actually stealing the development headline in those area too as well. There's a lot of development going on right now as we speak about AI and robotics, but the war headlines are taking all the attention away. So would definitely like to hear about development more from you. But maybe just one last question on the current situations that even if the war resolve, for yourself, do you see any possible Black Swan event or some sort of the biggest risk that maybe the market's not pricing in yet? Like for example, in the past 2 years, we believe that if we talk about Fed, we believe that Fed will, on a trend to lower interest over time.
Yeah.
But with the current situation, the oil price spikes up. There's been a fear about maybe the Fed need to reverse and raise interest rate again, which would be catastrophic for the market.
Yeah.
So there are a little bit of talk on that. So in your view, is that a risk at all that maybe this war will trigger some sort of Fed interest rate reverse or stagflation risk? And all that.
No, again, I think we have a situation with Jerome Powell where he's been kind of battered by Donald Trump, and Donald Trump's way of trying to get Jerome Powell to lower interest rates a little bit quicker than he has was to call him names, too late Powell. He's got a nickname for him, and to really to go after him, criminally, like he's being indicted for the renovation spend that he made on the Federal Reserve, and a lot of that is like, again, it's the way that Trump and his administration deals with things, and it creates a lot of noise, and then it also paralyzes a guy like Jerome Powell. I think what investors need to look at is what's next, and what's next is Warsh, and Kevin Warsh has written extensively about how he believes that lowering interest rates does not cause inflation. And I would tend to agree with him, because when you think about what causes inflation, it's money printing. We've got to stop money printing, and we've got to stop expanding the balance sheet. Like when we do that and we start putting money into the system, that's what really creates inflation. Inflation is not created by lower interest rates. Growth is created by lower interest rates. And so Warsh believes that you can lower interest rates and still keep inflation in check and allow growth to happen. So we're only a few months away from Warsh, taking over as the Fed chair. He's got a much different philosophy than Powell and from previous Fed chairman, and he's written about it. So what I would tell all your viewers to do is, like, don't take my word for it. Go and read what he's written in the past. His goal is to lower interest rates substantially. And I think he's going to get people on board to do that with him. And he believes that he could lower those interest rates without increasing inflation. And I would tend to agree with him. The other thing that I would tell you, read Milton Friedman. Milton Friedman says that interest rates don't really impact inflation. The only thing that impacts inflation is printing money.
Okay.
All right. And that's it. So as long as we don't print money and flood money into the system the way that we did during COVID, the way that we did during the financial crisis in 2008, we should be able to get inflation under control. When it comes to fuel, we just have to get through this. And once oil prices start to come down, I think what you're going to see is the price of oil, the price of gasoline will come, down pretty quickly. And then we don't have to worry about that anymore.
I see. And asking yourself, because you flew from the Strait, you're living in the States.
Yeah.
What about the economic situation on the ground that you see?
So people are annoyed. I will tell you people are annoyed because one of the things about Trump was drill, baby, drill. We're going to be energy independent. Oil prices are going to come down. And again, when you think about inflation, okay, I think the story was communicated poorly in the United States. When Trump was running, he said, I'm going to get prices down. I'm going to get prices down. It's impossible to get prices down to where they were before 9% inflation, which is what we had under the Biden administration, right? What he really meant was, I'm going to get the inflation rate down. And he's done that pretty well. But a key point that he did communicate was that because we would get energy prices so much lower, your day-to-day cost of living will be much better, even if you're spending it, a little bit more for goods and services elsewhere. That was working really well. But now that oil prices are up, he can't really say that. And when oil prices go up, so I'll give you, for instance, I live in Connecticut in the United States. And prior to the war, gas prices were coming down substantially. You were paying about $2.50 a gallon. Once we attacked Iran and the Strait of Hormuz closed and crude oil prices went up, that price went from $2.60 a gallon to about $3.70 a gallon.
Almost doubled.
Very quick, not almost double, but very, very quickly. And for the business owner that's driving around, or the mom that's going to pick up her kids every day and driving to the grocery store and doing all that stuff, that's a really substantial increase in your day-to-day spend. And so he's got to get that under control. He's very aware of it. And I think that's the reason why he wants to wrap this thing up in 2 to 3 weeks, because we have midterm elections that are coming up in November, and he doesn't want to lose at the polls. So it's very, very important that we get this straightened out, that we get oil prices back down low, and that we get a growth mindset again.
Okay. But hearing from you, the price gone up, it does affect the people in the States. But in your view, you don't see that as a risk to the economy?
It's a huge risk. Okay. Well, it's a huge risk from a sentiment perspective because, again, I think a lot of the policies of this administration can work, and they can work really well if we could just get through the noise. And we've had a lot of noise from the very beginning. Last year was the tariff announcements and the tariff tantrum, and the market took a hit. Then we came roaring back. And then we attacked Venezuela and we had a little blip. And now we've attacked Iran and we've had a little blip. I think we need a little bit of smooth sailing for a little while, because I think even his strong supporters are starting to get a little bit tired of having to explain everything. You know what I mean? At the end of the day, I think we end up in a good spot, and I think we see strong growth for the remainder of 2026. Starting in the second half, but we got to get there first.
Okay. I like how you use the word blip, because to the market, trillions of dollars at stake, whenever the US have these blips, with the trade war, with the Venezuela and now Iran, like you said. But as the time passed, it seems like Trump has all the answers for it, and has been making, improvement for the US economy and the market. And that's why I want to ask you the next questions is that, can you help us understand Trump better on what he's going to do next? Because on his agenda, not only Iran, he's also now going to visit China. He's also said that Cuba will be the next target for the States, and as well as he's trying to pressure Canada to become the 51st state and many more things. So a lot of stories around Trump after his midterm, still 2 more years, like you said. So help us understand him better so we can position ourselves in the market better?
So he's a businessman, number one, and he loves to be involved in every part of the business, just like he is for the was for the Trump organization. So besides the fact that he's president of the United States, he's also like head CEO of America. And you
runs
saw
inside the
that,
company.
yeah, you saw that when he went to the Middle East. He brought all the CEOs. He's their number one
Yeah.
salesperson. He's one of the, if you talk to people in New York real estate that knew him, they'll say he's like the best salesperson that's ever existed. And so he's selling for the United States right now. So what Trump is trying to do when it comes to Venezuela, when it comes to Cuba, when it comes to Canada, is reassert American dominance. And he's going to do that and continue to do that. And he's also repositioning us with all of our trade partners so that we can, onshore manufacturing back to the United States, rebuild the middle class, and then be more prosperous. And so that's what all of this is about. And he uses the United States economic prowess as leverage in all of his discussions. And so what I think you're going to see, and that's one of the reasons why I think he knew that he had to do something with Iran, because once he can get Iran out of the picture, that opens up the Middle East. And there's lots of business opportunity in the Middle East for American companies, right? And there's lots of opportunities for Israel, a free Israel. In if they could partner with the Middle East and work freely with the United States. And if you take what we're doing in like Venezuela, there are natural resources that we want there, and there's oil, and that oil is already being extracted from Venezuela, brought to Houston and Texas, and that's going to help us increase the oil supply, and it's going to allow him to make deals, providing energy to Europe and to Asia from Venezuela and not out of the Strait of Hormuz. When you think about why he's going to China, he wants to make a deal for our chip companies, specifically NVIDIA and AMD and some others, right? He doesn't like the fact that we can't sell into China right now and that there's all this stuff. So he's going to go make a deal. And I think that's going to open up the market for companies in the United States, but at better terms than it was in the past. If you think about China, for instance, right? I remember when I was a young person in this industry and I worked for a large insurance company in the United States, and we were trying to make a market in China. In order for us to do that, we had to partner with a Chinese company, give them 50% of the profits and all the IP. That didn't work out well for companies in the United States, and it allowed a lot of our IP to be stolen by China, and then we didn't get the benefit of that. So I think he just wants to reset all that. And I think that's actually going to be good for the United States. It'll be great for China. It'll be great for other Asian nations, South Korea, Thailand, because you're our allies.
Yes.
Right. And so I look forward to that trip. I was a little disappointed that it was postponed, but that's what he's doing. And when he again, I'll say this because it's very important. Trump always starts at the strongest, most extreme position. That's his negotiation style. And then he knows that he's going to have to come back somewhere in the middle. But generally speaking, once you get to that middle ground, it's good for everybody.
He always goes very extreme. So let me take you back to the day, the Liberation Day, when he brought out that big, whiteboard on the tax. So I guess you're not surprised at all because you knew that he's going to go
Always. And it's actually more shocking to me how people get nervous about it.
Okay.
It's very shocking to me that after all this time seeing him operate, that they still think that his most extreme position is where he's going to end up. Even right now, like I said, when he's talking about Europe and saying if you need oil from the Strait of Hormuz, you go get it. He doesn't really mean that. It's an extreme position. And what he's trying to do is motivate them, right? They're even talking about NATO now. We're going to have to reset NATO. Well, why is he doing that? Because he's trying to motivate NATO to do more in the region. So, and he knows that if he takes that stance, people will back down because the United States does have leverage. Now, as long as the United States has leverage, he'll be able to do that. And I think that's what you have to realize about him is he barks very, very loud in order to get your attention, and then he negotiates to a better place somewhere in the middle.
Perfect. That's a good playbook to understand Trump. But then now, let me ask you about the market then, because like you said, you're looking forward to the China trip as well as all these other negotiations that's going to happen. there'll be times when Trump, comes out demanding, very high stake or things like that again, and market will react.
Yeah.
Like you said, they'll panic. Like you're surprised they're panic, but they've still been panicking every time.
Yeah.
We still have Trump for 2 more years, assuming the winner midterm election goes well.
Yep.
So, any advice for the investor, especially in Thailand here, where we're so far away from news and we're not so used to listening to Trump, speaking on a television as much. All we hear from him is just the tweet, the headline coming in the morning our time. So every time is quite a surprise for us. And so how do we position better apart from not being panic? And how can we leverage or make benefit from Trump being this playbook?
I think that when he disrupts a market, what you have to do is say to yourself, what I said earlier is, do I have high conviction in this marketplace? Is it a real opportunity? Have I done my due diligence? Have I done my homework?
Okay.
I'm going to give you a real basic example. NVIDIA. Look at NVIDIA earnings. NVIDIA earnings this last quarter were the very best earnings call in the history of all companies that have ever been recorded.
Yes.
And the stock sold off because of noise.
Yeah.
I don't want to sell that stock. And I think it's a massive opportunity. And I don't think anything that's happening around the globe
is changing that.
Is going to change that. So if you have high conviction in something like that, don't worry about the noise.
Okay.
Like, this is just noise. Now, if there was something fundamentally that changed, let's say the hyperscalers, like all the people that are spending CapEx in semiconductors and in AI, if they pulled back, that's a fundamental choice. Now you might want to take some risk off the table. Okay. But if all of those people are still spending all that CapEx, if NVIDIA is confident in its growth and projecting even higher earnings and higher revenues and more sales looking out into the future, to me, I think the opportunity is still in place and I think the investment is still sound. So if it sells off, it's like what Warren Buffett says. In the short term, right? It's a vote. The stock market is a voting machine. Yes. But in the long term, it's a weighing machine. Start weighing your positions. Don't worry about the people that are voting on it that don't really know what they're doing. Do your due diligence, do your homework, and figure out if this is a place that you want to be for the long term and how much conviction you have. If that's where you want to be, stick with it. That's what I would say to people. And don't worry about the noise. The noise provides opportunity if you have high conviction.
Okay. Good that you touched on Warren Buffett, because last night, not sure if you followed, you've seen the news yet, but he just came out and had an interview on NBC last night saying that, I think Becky, who interviews him, asked, what are you doing with all these cash pile? Now we have a big correction. What are you going to do with it? Warren did say, Berkshire will spend this cash at the right time, but with the current market situation, they're still not making any move.
Yep.
Or not any big move. What's your view on that? Because you're quite positive on the future of the U.S., of the economy, of the technology, whereas this famous investor Warren Buffett, he's still sitting on a pile of cash. Yep. So I want to hear your thought.
Well, again, he's Warren Buffett. He's the greatest investor that's ever lived. And so if you are Warren Buffett, you can do whatever you want to do, and you're probably going to turn out okay, right? But for the common investor, and even Warren Buffett would tell the common investor, don't try to time the market. Don't be an active investor like me. Most likely you will fail if you do that. Okay. So even Warren Buffett, like if you ask Warren Buffett what he's doing, he's going to do what he does. He's the best at it. Like, I have no comment as to what he's doing, but I would say listen to his advice. And what's his advice? Be in the market. Don't try to time it. America's going to be fine in the long term.
Okay.
And so I'm saying that same thing to investors.
Okay.
Unless you have the ability to invest like Warren Buffett, don't try.
Okay.
But be in the market, take advantage of volatility, dollar cost average in, and know that the U.S. is going to be really good over time. It always has been. That's what I would say.
Don't bet against America, he said.
Don't bet against America.
Okay, but you're not taking the sign of him collecting cash piling as there may be a bigger correction ahead of us.
Warren Buffett has been wrong before. I mean, Warren Buffett said he missed Amazon. He was very late to Apple, although he's made a lot of money on Apple. He's, he never invested a dime in NVIDIA. So, I mean, Warren Buffett has a philosophy, and that works for Warren Buffett. And that's what I'm trying to say to you. It's like, don't try to be Warren Buffett because
Okay.
chances are you're not going to be able to be. Like, read his books, learn from him. But he's a very unique individual that's been able to outperform the market over time, and not many people have been able to have that kind of performance. So I have no criticism of Warren Buffett.
Understand.
And I understand why he wants to stockpile cash, and he's done that in the past, but it doesn't mean that he's 100% right all the time.
Thank you for your thought. He did say last night that he regret not only getting into Apple late, but he also regrets selling it early because he's been selling a bunch of Apple shares and it's been going up. So he did say that last night. Now let's talk AI. You know, you're Paul, you're quite excited about the future, and you're saying that there's a lot of development going on. And as long as the capex and the money is still flowing, you have no worries. However, breaking news again, just coming out this morning, Oracle did announce 30,000 layoff coming up and is restructuring into AI. And a lot of investors are quite worried about this so-called AI bubble where, you know, a lot of money has been flowing in, but the company has not been making revenue. So
they're making revenue. They want to see it hit the bottom line, right? So they are generating revenue, but there's phases to build outs, right? So if you think about it, let's just say we go back to the beginning of time. You're the first person to set foot on Thailand. There's no infrastructure built. It doesn't get built overnight. Okay. And it takes a long time and a lot of investment to build all these buildings, to build all these roads, to build the infrastructure that you need, right? Think about the first airplane, right? The Wright brothers in North Carolina, they invented flight, right? They figured out how to do it. And then the first commercial airplane was made. And this was a point that I heard Michael Saylor make this point. People just didn't hop on that plane. There was a lot of mistrust. There was a lot of, people were scared. They didn't understand aeronautic. It took a long time
for
commercial airplanes to adopt. The same thing is going to happen with things like AI, because so many people don't even understand its capabilities. They think AI is like, large language models, and they think it's like, oh, well, I put a question into ChatGPT and it gives me this really great answer. But it's so much more than that. And we are at the initial stages of the build out. So from my perspective, we have such a long way to go to build out all this infrastructure. And what's the alternative for these companies? They either invest in it heavily, and they become a part of it to generate revenues over time, or they don't invest in it and they become extinct because they don't have a presence in AI. So you tell me which side you want to be on. Would you want to be on the side that's not investing in AI, not building it out, not investing in it, and has no future? Or do you want to be on the side that's investing heavily? That's the thing. When you hear about layoffs, the layoffs aren't about they're not building revenue, so they got to cut jobs. The layoffs are about efficiencies. AI is creating a ton of efficiencies for these companies, and they're taking tasks that people do on a regular basis and they're automating them, right? So first on AI is like the intelligence, I think. Then it's robotic process automation and agentic AI, right? Then we're getting to inference AI. Then we're getting to robotic AI. There's so many different layers to this that are still being developed. And what's going to happen to the job market is it's going to change. People's roles are going to change. Let me give you an analogy on this. One of my first corporate jobs was at a company, New York Life Insurance Company. Okay. And it's in this really glorious building in New York City. It's a Cass Gilbert Art Deco building, beautiful building. And when I first started there, they would take people for tours of the building. And down in the basement, there was a vault. Now the vault's empty right now. It's a museum. It has like lots of artifacts. But back in the early 1900s, it was actually had cash in it. And every week, there were people who had the job of calculating the hours of every single employee.
Wow. By hand?
Yeah, by hand. Doing the calculations on a calculator, counting all the cash, putting it in envelopes, and then they would wheel a truck with the cash from the vault down the line and pay people every Friday that cash. Is that the way people still get paid now?
Definitely.
Did technology change that?
Yeah.
And some of these, anything that could be put on a spreadsheet, anything that could be, the bean counters, all those jobs are going away.
Yeah.
But new jobs will come based on this new technology. And I'm going to give you one more, for instance, and this comes directly from Jensen Huang. He was on the Joe Rogan podcast, and I heard him say this, so I want to give him credit for it. He said radiology, right? One of the initial things that AI was really good at was imaging. And so AI could collect all of these various different images, right, that are captured all around the globe, and they can diagnose things much better than any of the best people, human beings can, right? So what do? You get better reads of images in radiology. When that technology came out, people thought the radiology industry was going to go away. And they said there'll be no more need for radiologists. In fact, quite the opposite happened. Because AI is so good at reading the images and they could do so much more, so much quicker, you needed more radiologists because they had to talk to the patient. AI can't talk to the patient. You need more radiologists to talk to the patients, help them with the diagnosis, and help them with the treatments. So again, the fear was there would be no need for radiologists. And in fact, what AI has done is created more opportunities for radiologists.
I see.
So we just have to get through the initial transition of the old guard to the new guard. And I think what's going to happen is people are going to have much more fulfilling jobs and they're going to have more time to enjoy life. And that's what I think AI is going to ultimately help us do.
You quoted Jensen Huang. He did say there was one thing in the AI revolution that surprised him, that initially he thought, people thought it's going to replace, the most basic jobs first. But when it turns out it's not true, it turns out to be replacing the most sophisticated job, like software engineers and, like doctors or occupations where it takes years to learn the job, right? Now AI can do it in a fly, like lawyers and all that, high class job. What else is some misconception or some unexpected, change that maybe is not true about this AI change in your opinion?
Well, I think that it's going to take over and that human beings are going to become obsolete. I think human beings are going to get back to being human beings again, and they're going to be forced out of really risky jobs, right? So think about humanoid robotics for a minute, right? In New York, where I live, there's a place called Grand Central Station. It's an unbelievably busy train terminal, okay? And so if you've ever gone to the bathroom in an emergency in Grand Central Station, it can be quite disgusting. And human beings have to clean that up. Like there's a janitor that goes in there and has to clean that up. Wouldn't it be better if a robot can go in and within several seconds clean that and not have to do that disgusting job? Okay? What about coal miners? They go deep underground, put themselves at risk, right? And so many coal miners have gotten lung cancer and various different things because it's a very dirty job and it's an unhealthy job. Wouldn't it be better for a robot to go down and do that kind of job? We're talking about all this war that's happening around the globe. Soldiers, boots on the ground. Like, wouldn't it be better if we had, and we do have a lot of this technology today, drones, robots that can, go into harm's way so that human beings don't have to do that. So humanoid robotics is going to play a role. Technology is going to play a role in eliminating very dangerous jobs, very dirty jobs, and it's going to allow human beings to take on a more prominent role and have more time in their hands to actually be human, not have to sit around bean counting all day or, digging a ditch or, cleaning, multiple bathrooms a day. Like robots will be able to do that job much more efficiently and allow human beings to do other things that are more important, more human.
How many years away are we from that picture?
I mean, I think we're advancing pretty quickly. I don't know. I don't have an exact date, but I could tell you that forecasts say, that within the next 5 to 10 years, you'll start to see more robots in people's homes, in the workplace, so on and so forth. So it's not that far away. You're already seeing, like, part of humanoid robotics is autonomous driving. In the States, we already have that in a lot of different places. And it's growing around the globe. So, and that's a good thing. I mean, I hate to bring it up because he's such a great golfer, but look at Tiger Woods. Tiger Woods just got arrested for a DUI. How great would it be if he was in an autonomous vehicle that could drive him? Like, so this is what I'm saying. Like, you could literally eliminate the risk of DUI from the roads with all this great new technology making the world a better place, a safer place, a more efficient place, and then allowing human beings to have, more dignity.
Yeah, that's a tragic news. Tiger Woods
Yeah.
half Thai.
And I love him. I know, and I love
so
him.
we
I love
we
him.
all love him in Thailand. But you're right that AI and robotics can, save the world, make the world better, do dangerous jobs, safety jobs,
Make
and
the
then
world
makes the
better,
world
make it
better.
healthier, because it's going to be able to, get to decisions
Okay.
regarding like cancer treatments and all of these other diagnoses that can happen. Like surgeries, robotic surgeries are much more precise. They cause less infection. They're way more sterile, right? So there's so many different places where robots are going to play a role. And then again, if it gives you more time as a human being, isn't that worth it? What if we didn't have to work 7 days a week? What if we could work 6? What if we could work 5? What if we could work 3 or 2 and still be more productive? That would be an excellent thing. And then you could go do things that you love. Maybe you like to play golf. Maybe you like to garden. You know what I like? I like to cook. I'm Italian, right? I'm Italian American. So I like to make pizza dough. What if I had more time to make pizza dough and feed my, make food for my family, which brings me so much joy? That would be great.
You quoted Jensen Huang, so I'll quote Elon Musk on that.
Yeah.
He does say that in the future, working will be a choice. So you do believe that day will come, that working will be a choice.
I think human beings need, to be fulfilled. And they need a purpose. Like, go back to the greatest philosophers in the world, all the Greek philosophers, the ancient Roman philosophers. Like, what were they looking for? They were looking like, why are we here? Why do we exist? Right? And so human beings need a purpose. They need something to do on a day-to-day basis. I think what's going to happen is we're going to transition from what we do today to something different and something that may be more meaningful. Like, wouldn't you like to be able to have time to go into nature more often than you do today? Right? It would be nice if you had more time to do that. I think human beings will be able to do that. I like to play golf. I belong to a golf club in Connecticut. It would be great if I could play a little bit more golf, spend more time with my family, exercise more, like read more, do things that are fulfilling. And I think what's going to happen is over time, we're going to become more efficient. Do you use AI today?
Oh, yeah.
Me too. And the things that I use AI for, doesn't it make you more efficient?
Yes. Does save time, more efficient, like you said. Yeah, for sure.
And then, but there's always oversight, right? You don't just take what the AI gives you and then dump it out, right? No, you've got to read through it. You've got to make sure that it's accurate. So there's always going to be human oversight, right?
Okay.
But it'll make us more efficient, allow us to have more time to do the things that are fulfilling in life. And maybe we don't have to be slaves to our jobs,
Okay, I agree with you, Paul. Now I'm buying into your theme, AI, robotics, future, don't time the market. The opportunity is there. However, I'm surprised when you said that the robots, coming into our kitchen, our workplace, our factories, you did say 5 to 10 years away from the forecast just now.
Not complete. Like, it's going to happen within the next 5 to 10 years. You're going to see the implementation of robots. That's my belief from everything that I've read, everything that I see.
Okay.
Within 5 to 10 years, you're going to actually see humanoid robotics in lots of different places that you haven't seen them before. I'm not saying it'll be completed in 5 to 10 years. You'll start to see them implement.
Okay, so the implement will come before 5 years. Okay. Now help me through this. Okay. So one side, you investing in the future, this theme, AI, robotics, aero defense, things are developing very well. Whereas the other side, you said they're a laggard business who's not investing in AI. However, the valuation right now on the AI side is quite high versus the other side which is clearly not the futures, but is trading at very low valuation. So what do you tell investor where, they might feel like, okay, if I have 5 to 10 years, if this thing is graduating, is developing, why don't I just invest in something cheap, get quick short-term return, and find a chance where the high valuation stock may stumble, have some sort of a correction, then start investing in the future later. What's your words to them for the people who's waiting to invest in the future later instead of now?
I mean, by the time you wait, the future is here, right? So now you're not investing in the future anymore. So again, like you could look at this in a lot of different ways. If you invested in Bitcoin 10 years ago, you did pretty well, didn't you? I mean, that was the future. You don't know about it until you're there. So you have to do is like do your homework, have high conviction.
Okay.
For me, I have high conviction, and we at Themes, right? Like we have a 3-part pronged approach to how we think about the thematics and the sectors that we, create ETFs in. The first one is long-term opportunity for growth. And I use the word long-term because we're not looking for a trend of today or tomorrow. We want things that are long-term investments in places, in markets that are going to grow over time. We think AI is one of them. We think humanoid robotics is one of them. We think transatlantic defense is one of them. We think the largest financial institutions are always a part of that. They are as well, right? The second piece to that is we want pure plays. So a pure play into that market because we don't want style drift. If we're telling you that you should have high conviction in a certain area and we're offering that to you in an ETF, when you invest with us, we want you to know that you're getting what we say you're getting, right? And then last but not least, low fees, right? Because you if you're going to invest in something over time, high fees can really erode your compounded returns. So when you think about investing in those terms, okay, we're not saying that you're going to get the timing perfectly right the minute you enter into a trade. We're not saying that there won't be volatility, but what we're saying is if you have high conviction in those areas, why wait? You're never going to get the timing right.
Okay.
And even when you asked me, like, the first thing that I thought was like, I don't know what the perfect timing is. I've never known what the perfect timing is. But here's what I could tell you. In times when I haven't had the courage to invest in things that I believed in because they were trading at a lower valuation, I've always regretted it because what's happened? They've gone up over time and then I missed it. So it's not about fear of missing out. It's about entering positions that you believe have long-term investment growth. And if you believe that they have long-term investment growth, then you should be fine. If something fundamentally changes, and I go back to what I said earlier, like all of the the hyperscalers that are spending all this CapEx, if they start cutting that, if AI isn't, something that people, want to, develop anymore, if companies say humanoid robotics don't work anymore, we're going to get away from autonomous driving and let humans drive their cars again. Like, then that's a fundamental change or shift that you should be aware of, but that's not happening. And so I always say to people, because people will say to me, well, are you worried about AI? And I say, no. What about all these people that are worried about valuations and about, whether this is a bubble or not? And I say, well, okay, well, you've asked me, am I concerned? I've said no. And you've brought up these concerns, but you haven't given me any facts as to what's behind those concerns. So if you could provide me with facts, like real life information that tells me why I should be concerned, then I'll consider it. But I haven't heard any reason why NVIDIA isn't going to grow. Have you?
Can't find one yet.
So now I look at all the data and I see that they continue to grow. Their guidance continues to grow. Their bookings continue to grow for all their chips. They're expanding across all 5 layers of AI, right? Do you think Jensen Huang's a liar? Do you
I don't
think
know.
the CFO's a liar? Do you think they're fraudulently giving out this information? So unless somebody could tell me that the numbers are bogus, that the management team is a fraud, and that AI is going away, I'm not nervous about that investment over time.
Okay.
And so that's all I'm saying. It's like, show me a reason why I should get out of these things or why it's a bubble. Now, bubbles, they don't pop until they reach the point of capacity. We're not near capacity. Like, is AI infrastructure at capacity? Is the need for chips at capacity? No. For every 12 chips that NVIDIA makes or that AMD makes, or every one chip that they make, there's 12 people that want those chips. So we're not even near capacity yet. So my point is the bubble can expand and expand and expand. Think about a water balloon. You ever have a water balloon fight?
Oh, yeah.
You put the balloon to the faucet, you start building, right? You're building a bubble. But it doesn't burst just because you're building the bubble. When does it burst?
When it gets bigger and bigger and bigger.
And when we're not there yet. We're not at capacity. We're not at overcapacity.
In terms of capacity, one chip's NVIDIA built, there's 12 people trying to buy it. I agree with that. That capacity is still, not full yet. But what about in terms of investor demand and the pricing? Maybe it can be full in terms of so money is flushed in already.
Yeah, but what I would say to you, like you said, like, do I want to invest in something that appears to have a greater value? And I would say, what are their growth opportunities? Like when I look at NVIDIA, it continues to outpace its growth.
Okay.
So every time they say it's overvalued, it outpaces its valuation and it demands a higher valuation. That's something that I'm interested in investing in. What I don't want to do is look at something and say, oh, well, that compared to its historical valuation, it's cheap. But is it a value trap? Is it going to grow? Look at Kodak. People thought it was cheap. Like, went out of business. Like, it doesn't, just because something's cheap doesn't mean that it's valuable. And what you have to do is look and see if the business is intact and look and see if they're going to grow. And if they're not going to grow their earnings over time, if they're not going to grow their valuation over time, it doesn't matter how cheap it is.
Okay.
Right? So when I look at something like an NVIDIA, I say to myself, well, they continue to outpace their revenue forecast. They continue to outpace their earnings forecasts. And they're growing into higher and higher valuations. I want to be part of that growth.
Now, I want to be part of that growth too. So can you give me 3 must-own theme that I need for the next decade?
Yeah, I think like number one, humanoid robotics.
Okay.
We are at the very, very early stages of what's going to be transformative technology. Like I said, that's going to help so many different industries, and it's going to help people personally in their lives, whether that's helping elderly people get around and do tasks they can't do, whether it's going to be cleaning their house or, doing tasks around the home, mowing the lawn. And then from an industrial standpoint, all of the like the dangerous factory jobs, the heavy lifting, all that stuff, robots are going to, play a role there. When you think about autonomous driving and autonomous airplanes and aircraft, like so many different layers that humanoid robotics is going to impact our lives, both at work and at home. So we really, really like that theme. We think we're in the very, very early stages of it because, at some point, everybody's going to own a robot, just like everybody owns like a television or a radio or something like that. So the future is definitely there. The investment is being made. And, that's just a theme that we're really, really bullish on moving forward. When you talk about defense and defense contractors and investing
number 2?
Transatlantic defense, we believe in that wholeheartedly. There's an expression by the greatest hockey player in the world, Wayne Gretzky. He says, skate to where the puck is going. Okay. From an investment perspective, we'd say invest where the money's going.
Okay.
And governments all around the globe, I already mentioned it today, the United States, increasing spend on military capabilities, munitions, drones, all of that stuff. And it's all going to the prime contractors. NATO increasing their spend from 2% to 5% of their GDP because they have to rebuild their militaries and become more independently, build their own independent defense. And so that money is being spent with the prime contractors. We have an ETF that invests in NATO defense, aerospace and defense prime contractors in NATO member countries, including the U.S. And it's great as the markets are going up. You get really great growth out of it. And when the markets are coming down, it's also a very defensive play because that money will always be spent. They never cut that kind of money because it's about national security and defense. So we love that theme. And then there's a couple others. When you talk about AI, everybody talks about US AI, but China has been isolated and they've had to build out their own artificial intelligence capabilities across the entire stack. And so what we find is a lot of investors have exposure to US AI, but not a lot of investors have exposure to Chinese AI. We built a Chinese AI ETF. All Chinese mainland companies that are not on sanctions lists with the SEC or with US regulators, they're domiciled in China, and they complement the AI return very, very well because they're forced to do their own infrastructure build, data center builds, chip building, all of it on their own. So it's a great return stream in AI that is not crowded like the US trade. So again, if you talk about, hey, all these valuations are really high in the US, we offer you a Chinese AI ETF that's not as crowded and you still have better valuations. And then last but not least, we really love the largest financial companies on the planet, globally systemically important banks that are determined to be globally systemically important by the Financial Stability Board and Basel III Committee. And there are 29 names. We have an ETF called GSIB, and it's all those 29 names, equal weighted, rebalanced semi-annually. And the performance of the fund has been excellent in its category. In fact, most of the time it's number one in its category because those banks are positioned better than any other financial institution in the world because they are deemed to be too big to fail, which means when times get tough, central banks will back them and support them. They also have the most deposits. They have the best credit quality on their books. They're interconnected, and all of this great technology that we've been talking about and the build outs are financed by the largest banks in the world. So we're really positive on them.
Wow. Okay. So 4 themes. First is humanoid robots.
Yep.
2 is aerospace and defense, NATO. And 3 is, apart from US AI, you have a Chinese AI ETF focused on Chinese AI and
globally
on the
systemically important banks.
Out of these 4 themes, can you clarify, which theme would suit what type of investor? Like, for example, if I'm seeking like maximum return in the long term, would that have to be in humanoid robots? Is it going to be in 1 or is it on 3? Dragon AI.
I think those fall into the same kind of category. That's that high tech category
for all
that
4
has tremendous amount of growth.
Okay.
No, I'm talking about Dragon and humanoid robots.
Okay,
Tremendous amount of growth, but you're going to get a lot of volatility, right? So you have to be able to stomach the volatility. Understand that at times where energy needs increase, energy expense increases, or something happens geopolitically that those companies that are being invested in might get hit a little bit. You might get some volatility, but that might be an excellent opportunity to dollar cost average in, ride that volatility out, and get to a better place. So with long term explosive growth, you're going to get a lot more volatility. If you can handle the volatility, I think the long term growth prospects are there.
Those 2.
When you talk about a little bit more of a conservative approach, now you're talking about the globally systemically important
2
banks,
and 4, yes.
And you're talking about the transatlantic defense ETF, because again, both of those have tremendous growth opportunities, especially in rising markets. But when markets turn downward, they get a little bit more defensive. So really, really so it depends on who you are as an investor. If you want a little bit more stability, still get growth, but a little bit more stability and a smoother ride, I think NATO and GSIB are for you. But if you want that really high octane, explosive, long-term growth, but can handle the volatility, you're looking at BOTT for Chinese AI.
Very clear. So those 4 themes that Paul think we must own in the next decade, and he separated out why there's 2 differences about the maximized upside versus more can act as also a defense or more stable, I would say. But we talk about 2 and 4. If I'm talking about 5 to 10 years, do you think those will outperform S&P 500 in a good case? Like if there's no...
I mean, I think they have an excellent opportunity to outperform the S&P 500. If you look at what the largest financial companies have done, think of some of the names, JP Morgan, Goldman Sachs, they've really outperformed the S&P 500 over the last 5-10 years. I mean, these are, critically, again, globally systemically important banks for the entire infrastructure of the global financial system. This isn't just a U.S. portfolio either. This is a global portfolio. So the largest banks around the world, there's only 29 of them. I think they have an excellent opportunity to outperform the S&P. When you look at defense, it's outperformed the S&P as well. So when you have these really high conviction themes, again, when you see where the money's going and you invest in where the money's going, it's pretty high probability that you can outperform the S&P. Again, because they're not overly diversified. They're actually highly concentrated in what we think are, growing markets with long-term prospects.
Yeah, let's talk about concentration. If I'm going to bring back the theme, for example, number 1 and 3, the robotics versus the Chinese AI. If I'm a very sophisticated investor and I would like to, pick out the winner, right? So instead of just picking out the winner versus, buying the ETF or the basket, what's your recommendation? Like,
well, I mean, you better do your homework. First of all, it's going to be really tough for you to get access to some of the stocks that are in those portfolios because they're, some of them are on for the dragon. They're all Chinese mainland companies, and it's very difficult to access that, even if you're a U.S. investor. Very difficult to access those markets. But again, if you look at the humanoid robotics ETF as well, you're getting Chinese mainland exposure, you're getting South Korea, you're getting Japan. If you're going to try to pick those on your own, you better be a pretty sophisticated investor. Going back to what I said about Warren Buffett, right? He knows what he's doing. You better know what you're doing if you're going to try to pick winners. Very difficult to pick winners unless you're doing your homework. So if you want to pick winners, I would just tell people really, really study each individual company, make sure that you have high conviction, make sure you understand management and do all that bottom-up stuff. Otherwise, probably what's best for most people is to just get that high exposure to that sector or that theme in an ETF like ours at a low cost, and just, make sure you can stomach the volatility.
Okay, so from what you said, it seems like the winner may come up over time, but at this stage it seems like it's still a race. It just started the race,
yeah,
right?
Everybody wins at different times, right? Like think about sports. What's your favorite sport?
Basketball.
All right, so do you like the NBA?
Yes, for sure.
Okay, so for a few years there, Golden State was dominating, but they're not dominating anymore. Somebody else is winning. So it's hard to predict who's going to win. In the you like basketball, so we just had the NCAA tournament. We had the brackets, March Madness. Everybody fills out a bracket every year, and they try to see whether they can get them right. But it's very difficult to get everyone right, right?
Yeah.
And you never know who's going to win out of that tournament. Yeah. It's very hard to pick the winner. So my point is the same with stocks. How do you know who's going to win ultimately? So what you want is a highly concentrated portfolio, but not over diversification. That's what we offer in thematic investing in our ETFs. You're getting enough diversification, but in a highly concentrated portfolio so that you can capture the moves in that market.
That's a great point. Good comparison, by the way. And if I wanted to ask then, if I'm investing in these robots in the AI ETF, what happened when the winners starting to emerge and we can see that these winners are taking more and more market shares? Does the ETF will weight the portfolio percentage more than winners?
We stick to the criteria of the index and the index methodology, and there's a reason for that. We want to take human emotion out of it, and I can give you a perfect example.
Please, yeah.
Coming up. I was on CNBC doing an interview in the United States about a month and a half ago. And we were talking about NATO, and I was talking about its passive nature, how it has prime contractors, which is where most of the money goes from, the military spend from governments. And I was on with a competitor, and he has an active fund. And one of the securities that he highlighted was Kratos, which was in our portfolio as well. But he was talking about their active approach to it, the bottom-up selection, and how it was a big component to their strategy. Well, a week after the interview, I saw that firm sold out of their Kratos position. I thought, oh, he was just talking about it. They were so bullish on it. I wonder why they sold out of the Kratos position. Well, then the U.S. and Israel attacked Iran. Yeah. And Kratos went up over 14% in one day.
Out, yeah.
With the active approach, the bottom-up approach, they made a decision to get out of it. Okay. They didn't capture that return. In our approach, passive, we captured the return. So that's why I say we're not trying to pick winners. We're not trying to equal weight. If a stock runs up and it becomes a winner at a certain point, what did I just say before? Somebody else will be a winner later. We rebalance it. And we'll continue. If it rides up again, we'll rebalance it, but we'll keep it in the portfolio as long as it's meeting the criteria, and we'll rebalance it as risk mitigation, okay? Because we know that trees don't grow to the sky. So if we see something going, even NVIDIA, as bullish as I am on it, it doesn't mean that it's going straight up in a line, right? So what we're going to do is when it gets a little bit out over its skis, we'll rebalance. If it gets out over its skis again, we'll rebalance. Okay, if it gets out over its skis again, we'll rebalance. Because if it does then have a downturn, that's risk mitigation. And if you're investing in it, you're going to dollar cost average into that. So that's the way that we think about the portfolios. We don't try to pick the winners.
Great. So if I want to invest in these 4 themes for the longer term, leverage share ETF is better way to expose for longer term because it's systematic. You're not gonna miss out on selling out early or anything, right? You'll be balanced.
Yeah, we're just going to continue to rebalance, and as long as the securities that are in the portfolio meet the criteria of the index, they'll be included.
And with the way you manage the risk, it seems like it's better than for me to just buy and hold a few individual stocks in that theme all along because you do have a systematic manage, like you said, risk balance.
It's so much better to just get exposure to the theme and dollar cost average into it. Again, if it was an overly diversified portfolio, you're probably going to limit your returns, but they're not. They're concentrated portfolios. They're managed based on the index methodology, and they're pure plays. So you're going to get the exposure that you're looking for. And when that theme or that sector is going up, you're going to capture that upside. When it's going down, you're going to capture the downside with it. But that's okay because as long as you have high conviction in that theme, over the long term, it should work out for you.
Okay. My last point of this question I want to ask for the Thai people is that you may not aware, but in Thailand, we're the investing in the future of tech investing meet a boom about 4 years ago during COVID.
Yeah.
That time when COVID breakout, Thai people started to look for investment opportunity. There's one theme that was very popular, which is called ARK Invest, like Cathy Wood.
Yeah.
So a lot of Thai people do invest in this new technology theme back then, 4 years ago.
Yeah.
But then it was going great for a while initially. People make a lot of return until the Fed started reversing interest rate.
Yeah.
And Cathy Wood's ARK Invest share came crashing down.
Yeah.
It's been about, I think, 4 years since, and it's never has returned back to that point yet.
Right.
So a lot of people are scared now to invest in the future, into thematics and all that, because they're worried that if there's any changes, interest rate or some risk, these ETF can crash and never comes back again. What is leverage shares ETF thematics that you mentioned doing that is different than ARK Invest, or should investor who invested in ARK before be concerned investing in leverage shares?
So the first thing I want to say is I admire Cathy Wood. She's an amazing investment person in our industry, and she's built like a really great brand. So I don't have anything negative to say about ARK Invest or Cathy Wood. They have a philosophy, and it's what I was saying to you before. Like if you invested in her philosophy, which is growth, like she's investing in the future, and she says she'll take on volatility, she'll double cost average it down. Like and it's active. So she's making stock selections. Then, if that's what you're comfortable with and you invest with that, then you have to survive the good times and survive the downsides. But again, it's actively managed. So there's discretion there, and it's her team's analysis and their opinion on things. We try to take that out. We're a different approach. So what we're doing is we're sticking to a strict criteria for where revenues are developed, and then we're giving you that exposure to that market. We're not trying to pick the winners and the losers. So perhaps, and I don't know the situation, but with some of these funds that never bounce back, is maybe the active management of it caused them to get out of certain names or be in certain names that they shouldn't have been in the first place. With a passive approach, the criteria will always make the judgment. So again, with our humanoid robotics,
Passive,
it's passive. 50% of all the revenues have to come from humanoid robotics. If that doesn't happen, they won't be included. And it'll automatically eliminate those. And if something does, it'll be included. And so what that means is, like, you'll get a pure play on that sector. What I would encourage people to do is, if you don't want to be in the sector, don't invest in the fund. But if you want to be in that sector for the long haul, we're going to give you that exposure. We're going to give it to you at a low cost. And we're not going to make emotional decisions or bottom-up decisions. We're just going to provide you with that exposure. And I think over the long term, again, going back to what Warren Buffett said about the U.S. companies and the U.S. stock market, like over the long term, the U.S. will win. If you think humanoid robotics is going to win over the long term and you want exposure to it, we're going to help you win.
Okay. And if that theme is winning already, there's no choice, no point to taking risk into actively manage, like you said, because along the way, if you actively manage, you can somehow miss out or make a wrong decision at one point.
Yeah,
and then,
again, I don't want to tell people what to do. Our philosophy is, again, like, not everybody could be Warren Buffett. And not everybody's going to have that kind of investment return. And so what we're saying is we're taking his own advice, which is don't try to beat the market. Get exposure to the market and benefit from growth. And that's what we try to do. But we do it instead of broad markets, we do it in specific themes and sectors.
I see. So study the theme, build convictions, because along the way there'll be volatility.
Yeah.
If you don't build convictions, then you will not get through those volatility. Use the volatility to add in positions, as you said. And with that conviction, if you pick the right theme, the return will be in the long term will be great.
Always read the prospectus of the ETFs, including ours. Look at the index methodology and understand it, so that this way, as you're going through those cycles in the market, which we always go through, you'll understand why you're invested, and you'll be able to get through those emotional times.
Wow. Thank you very much, Paul, for sharing your thoughts and opinion in our show. Is there anything else would you like to share with our audience today?
No, I just want to say that it's been a pleasure to come to Thailand. This is my first visit. I love the city of Bangkok. The food is excellent. The people are warm and welcoming. They're so polite. It's been a tremendous experience. So I want to thank you for having me on the show. And I want to thank all of Thailand and Bangkok for being so hospitable. It's been a real joy to be here.
Yeah, you're welcome. Hopefully you come around more to talk, about investing in the theme.
Anytime.
Yeah. And next time, by the time you come back, hopefully we, see development into humanoid robot, like you said, that is now,
Maybe you won't even need me to be here. We'll just send a robot, and I'll take my tie off next time. I want to get one of those shirts. I'll come in a t-shirt.
Thank you. That'll be too soon. If that happened next time we meet, then we need to get into the theme right away.
All right, cool.
Thank you, Paul, for the show today. Thank you.
Thanks so much, Chris. Pleasure to be here.